Hey you guys, so let's have another candlestick lesson because we are long overdue for one. Now, I've talked about cupping handles before, inverted cupping handles, but this time I want to look at a cupping handle, but I also want to look at where would you make your move when you see a cupping handle. When I first started trading, double tops, double bottoms, tweezers, or triple tops and triple bottoms were some of my favorite patterns because they were simple, straight up and down lines, support and resistance type plays. But now, things like cupping handles and head and shoulders are something that I like more because it's a lot more data and a lot more price action to use to make a move and to also be confident in it being a higher probability setup. So I want to take you guys to the charts and I want to explain the cupping handle again, as well as where would you enter when you see this particular pattern. I like to have a plan A or plan B or plan A2, plan A3, have as many plans as possible on making my move. Basically just looking for confirmation that I'm getting in at a good spot. So we're going to go to the charts to look at a perfect visual of a cupping handle. Now, right now we are on the 15-minute time frame, and you don't really see much here because remember the time frame that you're on, the lower the time frame, the more candles that you are going to see. So you want to go to a higher time frame or go to a time frame that more aligns with the type of trade that you're trying to do. All right. In this case, because BlackBerry is a very slow moving stock, or it's a low cap, low risk, move sometimes 10 cents, 15 cents, 20 cents on the day, you want to go to a higher time frame because you're likely going to be in this trade a little bit longer than you would another company that moves $5 on a day, $2 on a day even. So I'm gonna come here and we're gonna go to the 4-hour time frame and we're gonna bring all of this in, okay? And now you can begin to see more clearly different setup. But let's go to the daily time frame. Each one of these candles take 1 full day to form. So you guys can see this here much more visible. Now this right here is what you would call the cup, and this part here. So I'm going to go down to over here and I'm going to go and find a circle or arch rather, so that I can mark it up. I'm going to come here and here, and so we're going to bring this down, bring it over and bring it down here so we can get a more perfect curve on the cup. Now, once you identify the cup, we have to go and find the handle. Now, the entire setup is pretty easy to find in general because you will see the candles curving anyway. So you can kind of look for the cup automatically and then go back in and find the handle. So I'm going to type cup here and put that there, and then the handle. So the handle will be the part that begins to form the downtrend from the cup pushing up. So we start here, it curves over here, and then we start to see the handle forming. Now, a cup and handle is a bullish signal, even though we do look for a bit of a downtrend because the downtrend is the handle being formed. And I want to say a downtrend, but like downward consolidation taking place. So we will look for that. And now we have the handle. So let's type in handle here. All right. Now, the ideal outcome of this cup and handle is for us to see a upward move like this. Okay, that's the cup, that's the handle. Now this is the part that we look for. Where will we make our entry and make our move on a cup and handle? Two things you can do, because sometimes we don't know how long that handle is going to form out, how long it's going to consolidate to the downside before it starts to make an upward move. So you have plan A, or at least what I like to call plan A, which is a support bounce. And by support bounce, we are looking for a bounce at a lower support for this handle to stop falling and start to push back up. So in this case, what we're going to do is we're going to go a little bit over to the left of the charts. Okay, and we're going to look for some potential levels that we would want to see a hold up to make our move to ride the handle, well, to ride the breakout up for this whole setup playing out. So I would look at this here. You see right up in this area here. So let's zoom that in. Right up in here, we got some resistance. Remember, this is the daily time frame. And so each candle took a day to form. So that entire day from here, here, this area and here, it could not break over this level. So it's showing that it's a strong resistance, but it broke it, but came back down when it started forming a cup. Okay, get on this side. It finally breaks this resistance again. And so now we want to see that this old resistance here acts as a support level to hold up over here for our handle. And as you can see, that's literally exactly what it did right up in here. Got a bit of an overkill here on this candle, but it came down, it pushed back up, down, and did the same thing. And once it got back to approximately $4.41 right up in here, I would look to make my move into this trade and prepare for the candles to break out of the handle and start to push up. And as you can see, this thing kind of played out. It's pushed up. This high is $5.09. The bears pushed it back down, and now it's trying to push back up again. So if I were to act on this now, even though we see this little bit of a play out, I would wait for us to get back here to about 441 to get in on a rinse and repeat and ride it back up. But overall, this here is sort of already playing out. Okay, now that was plan A, which was a support bounce. Plan B would be a breakout. And that's just if plan A doesn't hold up and it breaks below, and it may come a little further down. Now, we can easily go and find some further levels down here at the bottom. We got this level here at about 419 that could potentially hold up, or we can come down a little bit more and look for some other older resistance levels, rather that could be new support levels. So look for support bounces. That could be your initial plan, or we wait for a breakout. And the breakout would be, okay, we see where this handle here has been forming. We want to see this get back above a certain level and breaking out of these trend lines here to make our move, because breaking out of that will give us an indication that now we're about to begin to push up. So me personally, if I was to wait for a breakout, I would look for this thing to break out above 472, $4.72, right up in here where we got this little rejection here, and we got it again here, and you can kind of see it's over here as well. So I would wait for us to get back above 472, see if we hold up, and then ride it up to that $5 level, and then make this one another level for $5.32 as a target for my exit. So I will have this little block up here as my exit target on this one. Okay, so let me put exit target 2 and 1 and 2 rather. So if I have multiple contracts, which I highly recommend with something like BlackBerry, it's sell some here at about 508 and leave the runner to about 532. See what happens. Either close the trade altogether or see if we get a break above that. That would be plan B, the breakout. All right, so that's just simply how you would make your move on a cupping handle. Look for support, look for a bounce, see how well it holds up, which it did really well here at that 441 level. And if that doesn't work, look for another support level that towards the bottom. If we continue to come down, then wait for this thing to kind of push back up, give you a breakout, and ride it up. Now, because of the type of stock BlackBerry is, I know sometimes you may want to get in as low as possible, and I do recommend it, but we don't know how long that thing is going to continue to fall. So look for some heavy holdups, or just simply be patient and wait for the breakout to take place to make your move. Have enough contracts and enough time on your expiration date so that you can allow this entire thing to play out. And that was that. So that's the explanation for the cupping handle. You see how it looks, how it's formed, where to enter, and where to sort of look for some markups on where would be an ideal entry for this. So anytime that you see it, likely you can spot it pretty easily. You see the curve of the candle, you see the handle forming. Go to a higher time frame, mark it up, and then go to a lower time frame for a little bit more confirmation. So I hope this helped, and I hope this is one you can add to your arsenal for your next trade or when you're looking for the perfect setup. And with that, I will see you guys in the next one.